I wanted to show y'all this so that you guys know that, you have to run, you basically have to run the numbers in order to come up with your offers. But this is kind of how we come up with our offers. And then on the cash flow page, essentially what we're looking at is what we want. What do we want in the deal, right? So how are we going to make money on this deal? So essentially, you're going to look like current, and then you're going to look at after updates, right? So after updates means that you're increasing the price. You're increasing like your price per square foot. Okay, so we're taking it from 52 cents a square foot to 99 cents a square foot, right? So obviously, if we kept it this way, right, we're not going to be able to make, if we kept the prices where they are right now, we're not going to be making, any money on it. So we have to be able to increase the rents, right? We have to be able to do that. So that's kind of what the current versus the after updates is, okay? And so I wanted to show you that as well too. And then what you're going to look at, you as the buyer, if you're going to owner finance a deal, and we always offer owner financing on everything we do, but essentially you're looking at the gross monthly income. All right, so we're going to be making $20,000, right, a month. And you're looking at the operating monthly expenses. So it's $6,900 is basically what it's going to cost us to manage this, right? And we basically look at that as this is like, here's our expenses, right? So here's basically $82,000 is what our expenses are going to be for the year to operate, okay? And let's go back to the cash flow. And then also the mortgage is you want to take that, and then you want to take that, which is your NOI, right? So it's 20,000 minus 7,000 is 13,000, right? And then you're minus the mortgage, which really depends on what type of loan you get. Are you going to have cash? Are you going to have an owner finance something? Or are you going to go to the bank and get bank terms on that, right? So we kind of separate it out is what we do. So if you say, if we paid cash, this is how much we'd be making. If we got it owner financed, this is how much we'd be making, right? And if we were bank financing, this is how much we'd be making on the deal, right? So that's kind of how we look at it. That's what you want your net to be. All right. That's how you want to do it. So let me just put like 20. If we went to a bank and got this, it would be $1 million with 20% down, 5% interest, a fixed interest rate, or let's say 5.5%. I don't know what the interest rate's going to be. Right. And then, if we did owner financing, we'd probably put like either 10, 20, like 10, 15, or 20% down, right? And then you could just say like, okay, I'm going to pay, if I put 20% down, I'm only going to pay 4% interest. If I put 15% down, I'm going to pay 4.5% interest. And I put 10% down, I'll put 5% interest. So I'll put less down and pay more interest, or I'll put more down and put less interest. This is basically kind of what we offer here. It's just these kind of terms, okay? And then you'll be able to look at essentially what the purchase price is, the down payment, the interest rate, interest on the loan, right? Length of the balloon, and the amortized interest, right? Any costs, right? This one right here, we put in $50,000. You put $50,000 in CapEx. If there's no CapEx, then you could just put $1,000. This probably is going to take I would say maybe $25,000 in CapEx. Let's see, what else can we look at here? He has staffing is quite high. I think, let's see, what did he put in here? He put 400 times 12, right? So that's 400 a week times 12. I'm sorry, 400 a month times 12 plus 50 times 52. Plus 3,600. So I'm not sure why he has 3,600 in there, or 36,000 in there. 36,000 is probably Bonnie, is paying for Bonnie is what it is. But anyway, so that's kind of how we're running our numbers, right? So we're inputting them, running the numbers, right? And these are the inputs, looking at the cash on cash return, looking at the net target, percentage of, the mortgage, the net mortgage, basically after mortgage. Okay. and then making sure it hits 10% for both of us, both those or higher. And then, checking our numbers and evaluations to see if this is like a deal that we want to do. And then we put it on the owner financing letter, right? So this is what I call the magic letter. And this is kind of how our deals look. Okay. So we have just a letter that's basically said, like, here's our offer. Here's our offers. We have a cash offer, and then we have owner financing offers, right? And then this is just taken directly from, our cash flow page here. And then we just input this information right here, right into our owner financing letter. And you guys could just do this manually. You don't need a deal analyzer to do this, but you just basically offer a cash offer and then 3 owner financing offers. Okay.